What's going on, everybody? Jake Unfiltered here. Please like and subscribe for the YouTube algorithm, or shall I say the Altube algorithm, or shall I say Tesla Maesla? You know how it is. You know, get rich off Tesla, get rich off Wish, get rich off all the meme stocks, boy. Or shall you be a boglehead investor?
Okay, anyways, so today I'm going to talk about Fidelity because I've always been talking about my shitty stocks on Robinhood, but I had to figure out how to use Excel so I can post my Fidelity on it and take out all of my brokerage account numbers because I can't screen record my Fidelity account because you'll see all my information. Okay, so for Fidelity, I have $558 in my Roth IRA. $32 of that is gains, and the only accounts I have gains in is the ones that have my index funds in, because I bought a whole bunch of shitty stocks called like Wish and stuff like that. So we're gonna talk about index funds today. So let's go down to so this is my first account. Well, this wasn't the first one I made, but the first account I made was this Jacob Heron account, and then I made the Roth IRA, and then I decided to invest in Snapchat, where you can see here I lost $14. Let's just ignore that. So on my Roth IRA, I invested in FNILX, FREL, that is real estate index fund. FXAIX, it's kind of like SPY, it's the 500 index fund, like the S&P 500, FXAIX, and VTI. Alright, so I'm probably going to start investing in VTI more, and VT and SPY, but these are pretty much mimicking mainstream like Vanguard funds and S&P 500 funds. FNILX, I don't even know what that is, but I bought into it. It's a large cap index fund. FREL, it's kind of like the other real estate index fund, index ETF, or whatever it is. Okay, so let's check out FXAIX. FXAIX, top 10 holdings: Apple, Microsoft, Amazon, Facebook, Google, Tesla, Tesla Maesla. Ho, 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 ho. You notice all those famous YouTubers, they all got rich off of Tesla. They all invested in Tesla, and they made a bunch of fucking money. Okay, so they got the Nvidia. So this is their top 10 holdings here. So it's a 4% turnover rate, which is, it's the lesser amount of purchases or sales of long-term portfolio securities divided by the monthly average value of long-term securities. Blah, 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 blah. Okay, so year to date, 26% increase. 1 year, 26%. 3 years, 25%. Lifetime, 18% gains. It's got a 3-star rating. The thing about this fund is there is a 0 expense ratio, so you don't have to pay them any money to invest into this index fund. Kind of like if you go to VTI here, you have to let's see here. Yeah, they have a 0.03% expense ratio. But you know what? If the index fund does better, but you only have a 0.03% ratio, and it's like more reliable because they've been out longer, then it's probably worth it to pay that little expense ratio. Because, okay, so the lifetime of the fund, 9% in total returns year over year. 10-year of the fund, 15%. So the last year of the fund was a 26% increase. So if you invested into VTI a year ago, you'd have a 26% increase. So I've made $32 in my Roth IRA. It's been doing all right. It's probably one of the best investments I've made so far, is in index funds, mutual funds, and ETFs. They are the best boglehead investments. So in my savings account, this is for whenever, like, this is kind of like my emergency fund. I might make it just like I think I might make it my emergency fund, or like just incorporate it into my like future house down payment fund. So I made about $13 so far, just for my money sitting there. The only one that wasn't doing too good is the FXAIX, and that's the Zero International Index Fund. So it did not do me very well because it's the only one that's down. Everything else is like at their all-time highs. So I don't know if what's going on with that one. It's international, so I mean, I think that, yeah. And I'm sure it's an alright fund though. Let's see what it looks like. So FZILX, right? FZILX. Yeah. Okay. So the problem with the Fidelity funds is they don't have that much history going on. So they only have about like 5 years of history. Because this fund is, no, this one doesn't even have that much. This fund started out in 2018, and it has a 0 expense ratio, and this one's all around the world. So it's a Taiwan semiconductor, Tencent Holdings, Nestle, Samsung Electronics, Alibaba. Oh, that's probably why it crashed. That's like one of their top ones. Toyota Motor Corp. I like Toyota. Novartis. So I invested in this one. The risk category is like in the middle, more towards the higher side of risk. And then I got FREL. Let's check out what FREL is. So the lifetime, 7%, 7.87%. 5 years, 11%. So last year, you gained 31%. This started out back in 2015. So you see, it's a pretty good index fund if you want to invest in real estate. So like you can just invest in this index fund, and then you can get a whole broad investment into real estate without having to go out and buy houses. It's pretty much just like in the real estate space. I mean, I wouldn't go against buying real estate for investments. That is also a very good way to build wealth. We also got FXAIX. This one right here, this is the S&P 500, the name brand one, and then this is the Fidelity one. The last year, 28.69%. So you can see it's really close to the S&P 500. But the thing about the Fidelity 500 index fund is that your expense ratio is 0.015%. Let's see what the S&P 500 is. SPY, right? That's SPY, right? Okay. I'll wait for this computer to load. Let's see their expense ratio. Yeah, expense rate, they have a 0.09% expense ratio. So if you just invest in FXAIX, you're I don't know how much the difference is you're saving from your tiny amount of your 0.2% less increase, but it sounds like it's better than what you would have missed on the expense ratio. So your expense ratio is 0.09, and you're down 0.02. So obviously you might have made a better gain in FXAIX. Low expensive, high returns. It's a 4 out of 5 in returns. Overall rating 5%. This is one of their best index funds. So here's the one that VT. This one's invested in the entire world stock market. This is the one that Strongman Personal Finance loves. This one has a 0.08 expense ratio. 52 weeks, 16% up. So let's look at the life. The life is about an 8% increase. So yeah, the yearly returns are pretty good for this fund. And I'm thinking about investing into this fund as well. There's some similar ETFs with huge expense ratios. I wouldn't even like touch these ones over here. VT is like definitely the best one to go in. It's an Apple. I love Apple. Microsoft, Amazon, Tesla, Google, Nvidia, Facebook, JPM, HD. So these are pretty much all American companies right here. But I'm sure, like, in the 9,308 holdings, which is what's cool. There's definitely, sorry, I didn't finish. There's definitely other companies around the world in here. So what's cool about Fidelity is you can actually just click view 9,308 holdings, and you can literally just go down and look at all the holdings they have, all 9,000 of them. So you could literally go through here, pick a random one and buy it if you wanted, you know, just like do the monkey dart thing, just pick a random company and invest in it and see what happens. But yeah, that's a lot of companies to watch through as a company, as a fund. But I really like VTI. It definitely has extremely good returns, but they have 4,000 holdings. So what I would recommend for myself is to buy index funds, ETFs. Like, these are the best. Don't be buying those shitty fucking some stocks unless it's like a tiny portion of your portfolio. Like, I'm like such an idiot that I bought all these garbage meme stocks, and it just ruined everything for me. Like, I lost a bunch of money. I'll never make that money back unless I do. Like, I'm just waiting to get like almost back to what I bought it for. I'm selling all of it, and then I'm putting it all into index funds and ETFs. That's my plan for my Robinhood portfolio, is to just sell out of every single thing I can and then put it into probably VTI, maybe some Apple, probably put it into SPY, or some FXAIX and some FREL and some FXAIX, because these are just discount, cheaper versions of the S&P 500 Vanguard index funds, ETFs. You know, it's a lot cheaper, but you have to have a Fidelity account to do it, or else you can't buy these on any other brokerage. Which I don't know if that's a good thing, because I wish that, like, if you could buy these funds on other brokerages, I feel like more people would be able to invest in it and it would hold it even stronger. Or maybe not. Like, maybe I'm wrong. Maybe it is better that it's just in Fidelity, because people will just, like, because just the people that use Fidelity, they're not going to, like, try to screw over the funds, you know. Because, like, us Fidelity users, we love Fidelity. But yeah. Well, I think that's all I really got to go through. I'm gonna go check on my girlfriend, so please like, subscribe, and comment. Tell me what you want to see. I might be going over some more index funds for y'all, because I'm tired of talking about these trashy meme stocks that I hate. But yeah, have a good weekend, have a good day, have a good week, because I don't know when I'm posting this video. Thank you for watching.